Morning, good afternoon, rather, everyone, depending where you are. This is Campbell McCrary from Amvest Capital in New York City. Welcome to the Amvest Capital Inc. live webinar with Altius Minerals. Altius trades on the TSX as ALS and on the OTCQX as ATUSF. We hope you'll enjoy today's program. It will be available in on-demand replay about an hour and a half after we wrap up here. The original link, your registration link, and the on-demand link are all the same, so you won't have to ask for anything special. Very important in these programs is asking questions of management. So you'll see something pulsing on your screen. Just fill out that box and press enter, and we'll get the question and we'll ask it in real time of Brian. Another few important items. You can share this event live and put it right on social media as we're broadcasting, and you can also email it. And again, the link will work for the replay. And then here are some important links that are being highlighted here regarding stock price, website, presentation. At the end of the show, you can do this once. Please share your feedback, all candid, and we'll get to management immediately. Amvest, of course, is a New York-based specialist investment management corporate finance firm focused on the natural resource sector. Again and again and again, this call is absolutely for informational purposes only. Thank you. Very pleased with that. Have with us today Brian Dalton, President and CEO of Altius, and welcome.
Thank you very much, Campbell. Pleasure to be back.
You're welcome. Floor is yours.
Floor is mine. Okay, well, thanks, everybody. I'll move us through here. First up, that was our forward-looking statement that I probably blew through a little too quickly. There will be forward-looking statements in this presentation, and everyone is advised to read through this carefully, as always. I'm sure everyone does. So just an overview for anyone who might be new to the Altius story. Altius is primarily a resource royalty company, and we're focused on the parts of the resource world that are base metals, bulk commodities, and increasingly now renewable energy as a result of a new business that we began a few years ago. So in particular, we have four main planks to our royalty business. So several renewable energy projects that we've been building up over the past few years, in particular during the past year. We have several exposures to copper, nickel, lithium, and cobalt mines. So these are critical to the electrification transition and that thematic. We have iron ore royalties that are particular in that they are focused on high purity forms of iron ore and that can be used to make steel with much less carbon intensity than typical iron ores. And last but not least, we have a significant business that is comprised of royalties on the majority of the major potash mines in Saskatchewan, Canada. So potash being the agricultural fertilizer. We specialize in long life royalties. That's one of our hallmarks for sure, because we see that as being very key to optionality and option value realization at the royalty level. We have a track record for generating strong returns, and that's mainly because we're very counter-cyclical in our focus. Commodities are obviously very cyclical part of the economy, and we try to make that cycle work for us. And we think that the business model generally provides excellent long-term risk protection while providing all that free upside optionality that I just talked about. So first, on the counter-cyclical approach, this is our interpretation of the commodity cycle really over the past entire history of Altius. So Altius was formed back in 1997. It was formed by a group of us that were studying at university, studying geology at university at the time. But bringing it forward, look to the right-hand part of the chart. You can see that in the big downturn that took place sort of from 2012 to about 2020, we were very busy. All the little stars on the chart show points of acquisition of royalties. So we were quite successful in the previous cycle and made a lot of money. We sat on that money until conditions became favorable for acquisitions, and acquire we did. And ultimately what that has done is translated into a neatly balanced portfolio across those different areas that I spoke about. So what I show here is the commodity mix, both by royalty revenue year to date. So that would be, I would consider, a relatively short-term way of looking at Altius's portfolio. And then the more long-term way to view our business would be to look at the net asset values. So you can see on that basis that potash is the largest part of our business, with renewables dominated, power generation close second, and base metals generally at around the same level. But overall, neatly balanced across these major base, bulk, and power generation areas. That wave of acquisitions through the downturn has translated into some pretty good returns, I think, for our shareholders. And these are all shown here on a per share basis, which is all that ever really matters. And you can see that through both the M&A and more recently through better prices across the commodity spectrum, there's been a fairly steady amount of growth across the business collectively from all of these different exposure areas. And it's translated into very strong royalty revenues on a per share basis over time. Long life, I touched on that on the opening slide. Again, we believe that long life assets are the way that it's the easy way to figure out where optionality rests. Assets that have long lives, it just means that their resources as a function of their current production rates are large. And so every time you get market cycles that provide incentivization conditions, anybody who has an asset that has a lot of resource relative to the amount that it's producing at that time gets, they typically will consider that for investment to grow out expansion rates. Now at the royalty level, that's the dream. That's what we do this for. You want to have operators invest in their businesses and the assets that you hold royalties on. The operator bears all of the capital costs of expansions, and we are the beneficiaries alongside of them of any, increased production, increased revenue that comes along, all for free. So this slide basically looks at the way we did it was to take the top 10 assets of a whole host of resource royalty peers and to compare the average remaining lives. And you can see that by this measure, Altius stands out very, very prominently here, with about 38 years of average remaining resource life across the portfolio. So another way to put it is I think that amongst the royalty companies, our portfolio is the most annuity-like and also the most pregnant in terms of option value and potential for future growth and expansions, all at no cost. So this is a little summary slide really on how the business has been performing and what the capital structure looks like. We've been around for 25 years. And I'm proud to say that we only have 41.4 million shares outstanding, no rollbacks involved over that period of time. That's the count right now. The market cap of the business today is about $660 million. On the bottom left of this slide, you can see our tracking of returns of capital to shareholders, the blue being dividends and the orange buyback amounts. Since we spoke last, Campbell, we have increased our dividend by 40%. So it's gone up from 20 cents to 28 cents per share. And collectively, with the buyback this year, we, depending on how far we go with the buyback during the remainder of the year, we've returned about 39 cents a share to shareholders. Top right looks to net debt. Maybe a better way of presenting this slide at this point would be to talk about net cash and investments, because we're in a significant negative net debt position today. And since over the course of this year, that's improved by a further $60 million. So our negative net debt has gone from negative 35, meaning we have 35 million more in cash and investments than we do debt. And that's now increased to around $97 million. Another part of our business that I think is quite a differentiator, in fact, is we have what we call a project generation business. And there we have a team of geologists that generates mineral exploration projects. We vend them out to various junior, senior companies, taking back equity and royalties. So its main purpose really is to build up that long-term pipeline of royalties for our business. But along the way, through the equity positions, it's also been quite a profitable piece of what we do. We've definitely managed to make exploration a real business and a profitable one. So far this year, we've had net monetizations of about $30 million or $13 million from those equity positions. So that will be in addition to the royalty revenue numbers that I would have quoted earlier. But overall, very strong balance sheet. I think we're making good on promises to increase returns on capital to shareholders, and our balance sheet's in fantastic shape. So I'll quickly run through the different royalty interests that we hold. I won't belabor this because I know you're anxious to get to questions. But first with potash, this is the biggest part of our business by net asset value. We hold royalties on projects in Saskatchewan, which is the major production area in the world for that fertilizer. The royalties that we hold are on mines that represent about 22% of global potash production. We acquired these back in 2014, and they've been performing very nicely over that period of time. The mines collectively have increased their production rates by almost 40% in the period since we've acquired them. And that's because just before we acquired them, they were in the process of completing major expansions and built out excess capacities. So as the market has grown for potash over that period of time, these operators have been able to continue to boost their production levels into that increasing global demand for potash, and we've obviously been a great beneficiary of that. At current growth rates for potash, we're looking at probably somewhere in the range of 20 to 25 million tons of incremental demand for potash in the world out by 2030. And the operators and the mines that we hold royalties on have remaining capacity to grow out their production levels by something over 7 million tons from here, which would represent about a 50% increase in production over 2020 levels. So there's quite a bit of room to go before these mines reach full capacity relative to recent expansions that are completed. The money is spent, the capacity is there, and they're basically just ramping up into demand. Beyond that, the mines also hold incredible resources that allow these operators to continue to invest in their businesses and grow and expand their production rates over and over in the future as demand dictates. Just to illustrate what I'm talking about in terms of extensive resources, if you focus on the bottom part of this slide, the 5 mines here, you can see that the total remaining resource, if you measure it as a function of or relative to recent production rates, you can see that the indicated lives are in the hundreds and in some cases more than 1,000 years. So loads and loads of room for future expansions. And again, these are some of the very strongest potash assets in the world and are logical places for new investment when markets demand so. All at no cost to Altius. On the metal side of our business, we've been very focused here on looking at those metals that are going to be essential as the world transitions away from fossil fuels and begins to electrify. So within the metal spectrum, we're focused more on those that we believe are supported by that broader thematic. And so for us, that would include copper, lithium, nickel, and cobalt. And the drivers we see for each of those in terms of demand would be incredibly increasing adoption of wind and solar, which are quite intensive in copper usage. Storage related to that, which goes to the lithium, nickel, and cobalt on the battery side. Transmission. I think it's widely recognized that most major regions of the world are in sore need of major investments in their transmission infrastructure to support electrification demands that are underway. And again, copper is a huge beneficiary there. And then, of course, you've got charging and electrical vehicles. So these are some pretty big drivers, really, for increasing demand and make us pretty bullish long haul around the assets that we hold in the metal space. At the bottom of the slide, I list the assets that we hold interests in. Within that collection of assets, there are 7 operating mines, and there are another 6 that we would consider to be at either late stage evaluation, development, and construction. So lots of runway and growth there based upon investments we've made over the last number of years, anticipating what seems to be underway in the market right now with a major demand surge before us. Renewable energy. So when we spoke last, I believe it was in March, we had just completed the spin out of a public company called Altius Renewable Royalties. So this was being spun out of the Altius Minerals business. To take it back a little bit, a few years ago, we had pretty significant revenue coming in from coal mines in Alberta, Canada, that were mine mount to thermal coal generating, power generating plants. But the writing was on the wall, and these were going to be phased out by regulation. And we made a decision. I think most of our peers in the space that had exposure to thermal coal made a call early on to divest. We took a different path, and we decided to take whatever revenues were going to come from those assets before they were phased out, and to try to build something more enduring, not just pass the buck, if you will. So what we did is we began to build and innovate a new business to invest in the renewable energy sector at the royalty level. And to our surprise, nobody was doing that. We were innovating something that we believed was going to be quite enduring. The result of that to date, in a relatively short period of time, is that we now hold royalties on renewable energy projects that total over 3 gigawatts of total generation, relatively well balanced between wind and solar. And just since we last spoke, we would have had about 1,000 megawatts under royalty, and so that's grown to over 3,000 in a relatively short period of time. Everything about this business has really exceeded our expectations, and things have just moved along much faster. I should also point out that Altius Renewable Royalties is 60% owned by Altius Minerals Corporation, and Altius Renewable Royalties is in a 50-50 joint venture with Apollo Global Management. I won't go through this slide, but this just lists the royalties that the projects that we've acquired royalties on, both through direct acquisitions from operators and owners, but also through the funding of developers who in turn sell these on to final sponsors with our royalties attached. We've got a couple of different ways in which we create royalties through this business. The key message from this slide is that there's basically 15 royalties that have been created in a very short period of time, and we don't see any let up right now in terms of adoption of what we're offering to that sector. So really, really exciting business. Iron ore, I mentioned that we're focused on the very highest quality spectrum of the iron ore world. So we want those types of iron ore that are at 65% iron content or better. And the reason for that is that these are the iron ores that, when they're used in steel making, have much lower intensity of emissions and pollution, basically because there's such low impurities. And to give you a sense of that, a 58% iron ore has about 17% impurity. So the iron to impurities ratios is about 3.5 to 1, whereas a 66% high quality iron ore has only 6% impurity. So the iron to impurities ratio is 11 to 1. And when you factor that into a steel making furnace, it's those impurities that really cause the emissions, the impurities that cause the operators to have to use so much more metallurgical coal in order to drive the chemical process. So we believe that there's only growing demand for the higher quality end of the iron ore world. The steel making will obviously continue. And the other thing you're seeing is it's an increasing spread, or a more firmly established spread and value premium being applied to those higher quality products, largely because pollution is starting to be priced. So if you use a product that causes less pollution, it results in less cost to the operator for their polluting impacts, and that premium is then conveyed to the producer of the iron ore. We're focused in the Labrador Trough of Canada, so there's two main exposures that I'd point to. One is through our holding in, or indirect holding in the Iron Ore Company of Canada operations, which is operated by Rio Tinto. This produces about 18 million tons per year of both high quality concentrates and iron ore pellets. The nameplate capacity of that mine is around 23 million tons. So there are investments underway that were announced earlier this year by IOC to debottleneck and try to bring that production rate from around 18 or so million tons now up to the full nameplate capacity of 23 million tons. So that work is happening. There was also an announcement this year about a new mine being opened within the project footprint, and that is expected to have about a 47-year mine life. So there's really no end in sight to these operations. And we believe, in fact, that the resources are significant enough within that land package that they could quite logically be considered for much larger scale production rates with further investment in the future. But that's obviously Rio Tinto's and IOC's decision to make. The other project is the Kami project. So this is something that our exploration teams put together a number of years ago, identified a resource. It's within the major production area, not too far from the IOC mine. And we defined a pretty large resource. We ultimately sold that project on, retaining a 3% royalty. And the project today is in the hands of Champion Iron, which is another producer, an adjacent producer, very successful group, operating the Bloom Lake mine, adjacent Bloom Lake mine. And so what Champion is up to right now is they are in the midst of updating previous feasibility studies for this project. It was previously contemplated as an 8 million ton per year mine that would produce around 65% iron ore. But Champion, recognizing how demand for ultra high quality products is increasing, has been updating that feasibility study. And the way they're looking at the project is as a potential 8 to 12 million ton per year producer, and they're targeting concentrate grades in the 68 or even better kind of grade. So basically quality that could even potentially be used in electric arc furnaces, and therefore would require no coal usage whatsoever in the steel making process. Pretty exciting project, and we're looking forward to hearing the results of that updated study sometime early next year. This could be a really significant event for Altius. If they decide to proceed with this project, it would easily become our most material royalty overnight. This is just a slide that sort of goes through all of the different projects and royalty interests that we hold that at this point in the cycle are being considered for either for new build or for expansion, or have, something is going on. The operators have signaled that they are considering investing in growing assets. So it would include our Chapada interest, which is held by Lundin. They're in the middle of ongoing mining expansion studies. We'd expect to hear results from that next year. Curipamba is a project in Ecuador that we hold a royalty on. We're expecting to see results from a feasibility study on that in the current quarter. At Voisey's Bay, it's an existing operating mine, but it has two new underground mines that are currently under construction. And the next three are lithium interests that we hold through. We're a founding shareholder of a private company called Lithium Royalty Corporation. And so the three interests there are held by Sigma Lithium project in Brazil. That's at late stage feasibility and has a pilot plant operating. Just announced a big offtake agreement with a major battery producer. Neolithium's project, actually Neolithium is in the process of being acquired by Zijin Mining, but its Tres Quebradas project is at late stage feasibility, targeting production, I believe, late next year. And Finesse in Australia, construction has just begun, project finance fully in place, major offtake agreement also just signed. So lots going on within the lithium part of our portfolio. It doesn't show up at all today on the revenue side of things, but it's something that's really coming on, is going to be a significant part of our business going forward. In potash, I already touched on the fact that the current mines have excess capacity that's being ramped up into. We covered iron ore. We've covered, I guess, the renewable energy side of things. Have 5 operating projects, another 11, I believe, at various stages. No, 9 at various stages, including one in construction that's expected to be operational later this year. And in gold, we actually now have a significant interest, and I think something that investors and shareholders need to keep a close eye on. Through an older exploration agreement, we ended up with a royalty on a project called Silicon in Nevada. The project ended up in the hands of AngloGold Ashanti, and they've just come out and said that they have made a significant discovery on this project too, in fact, and they're expecting first resources to be published based upon their data as of the end of this year. So not quite sure how all this happened, how the Space Metals and Bulks Commodities Royalties Company looks like it may have a major, potentially even tier 1 gold royalty on its hands, but we'll take it. And we won't just take it, I guess we've earned it, because it's coming through the same project generation business that I talked about, which is the business that lays the whole groundwork for the long-term growth in Altius. So on this chart, on this slide, we can see various junior companies that we hold through that business. That's where the equity positions come from. Across this group of companies, which we either hold equity in or royalties on their projects, there's over 300 kilometers of drilling that will take place this year. It's 200 miles of drilling, all funded by these partners, but all of that potential upside that comes from that much work is for the benefit of Altius shareholders at no cost. The other thing I'll say about this business, when I talked about those acquisitions right at the very beginning of the presentation that we made through the downturn, because we've been successful in the previous upturn, all that success was through this project generation business. We didn't have any significant royalties at that point, but we made enough cash through the project generation business that we were able to buy all of these cash flowing royalties that have been generating, will generate somewhere in the order of $80 million for us this year. It all came from this business. So I often refer to this as the golden goose, and the royalties being the eggs. The real fun, differentiating part of our business. We create our own royalties in our long-term royalty pipeline. We don't have to buy things. So I think that gets me through the slides, and I'm going to be really happy now to take some questions.
Okay. Update on Orogen royalties. I believe that's Altius's, that's Orogen's largest shareholder. Anything you want to add there? I know you mentioned it. But.
Yeah, so Orogen is actually I should back up a little bit. Orogen was formed when Evrim Resources and Renaissance Mining emerged earlier this year. We happened to be shareholders of both companies. But through an original funding agreement with Renaissance, that's how we ended up with the royalty on the Silicon project. Renaissance also retained so we have a 1.5% NSR on the Silicon project, and Orogen has a 1% NSR on that project. So yeah, we're fellow owners of that potentially very important royalty. together, and we have over the past couple of years added to our position pretty steadily, and we're now we're the largest shareholder of Origin. Great guys. Beyond that holding in Silicon, they've been doing a fantastic job, I believe, of generating projects and farming them out. And another of their royalties, in fact, called Ermitaño in Mexico, is expected to reach production at some point late this year, early next year. So really great little company. Love what the guys are doing, and we're really happy to be big shareholders there.
Okay, excellent. Next question, a little more on Altius Renewable Royalties Corporation. Altius Minerals, I believe, owns 94% of Altius Renewable before spinning the company off, but I have no idea how much ownership you retained in the new company. Maybe just clarify some of that.
Post the IPO, Altius Minerals owns just under 60% of Altius Renewable royalties. And we're long-term holders.
Just changing subject for a second, do you think Altius would ever consider buybacks?
Our buyback is active as we speak. We've been, I think we've purchased some $6 million worth of shares as of our last reporting, which would have been at the end of Q2, and we've continued on. We continued on in Q3. Yeah, no, we're every chance the market wants to give us, we're happy to buy them. Just keep serving it up.
Any indication when listed royalty company may IPO, and does ALS plan to exercise the 10% direct interest acquisition right, especially after Neolithium takeover?
I can't really speak to when LRC might IPO, or even if that's its route ahead. So I think it's around 11 or 12% founding shareholder, and as part of that original founding interest, we were given co-participation rights to acquire royalties. When they were making royalty acquisition, we could also buy some indirectly. So in select cases, we have exercised those rights. But I'm really amazed at how that company has come along. It's led by a fellow named Ernie Ortiz, the CEO. It's actually interesting as well. It's with the renewables business, after we got it up and running, we were approached and partnered and joint ventured with private equity firm Apollo. In this case, it was Riverstone Holdings who's come on board, so that's now our fellow shareholder from the private equity world. But they've built up a tremendous suite of assets. It's been really well technically led, and the royalties that it's acquired throughout the world are on. I mean, everybody's got a lithium project, but we all know there's only a few of these things that ever really work. And they've done a great job at focusing on very high quality projects that will make it. And it seems like every time we turn around, whichever company we've just bought a royalty from gets taken over by a big player to build their mine, or somebody signs up a major offtakes. Great business. You're going to hear lots more about it, but it's not for me to say as to what the schedule is for IPO or any other plans, or if that's even in the works. We're quite happy with it as it is, and we'll be quite happy with it if it's public, but we're meaning to be a long-term shareholder.
Okay. Brian, do you see the Silicon and other gold royalty remaining within the company, or as a potential spin out or sale?
Too early to call. We don't have a resource estimate. Lots of us have heard rumors about what Anglo Gold has hit on that project, and I mean, if the rumors are anywhere near close, it's a major discovery. But we obviously need to get that information in hand before we start to make any calls about whether or not it's meaningful enough to stay within the Altius Minerals structure, or if it's better spun out or potentially even divested. But for now, we're all in wait and see mode, and just to get a real handle on what Anglo has come up with there. Pretty exciting.
You see any opportunities other than wind and solar?
On the renewables platform, I mean, really what the broader potential list of investments for Altius Renewable Royalties would include hydro for sure. There just aren't that many hydro projects getting built. That's largely done, I think, in most parts of the world. Where we are expecting to see a lot of additions would be on the storage side. But some of that's going to happen naturally because a lot of the projects that we've invested in, particularly through the developers, are being advanced now with storage as part of the package. But we also expect that there will be standalone storage sites out there that serve, groups of renewable energy projects, and that's definitely on our radar screen. Yeah, so
okay.
All within the mandate.
Any comment on the viability of Wolfden's Picket Mountain?
Technical viability looks fantastic, but obviously they're trying to break new ground. When they took on that project in Maine, it was right on the heels of some legislative changes or regulatory changes that had previously disallowed all forms of mining. And I know they had a bit of a setback in the past couple of weeks there on a rezoning application. So it's a hard one to call, but I think I saw a release this morning that they're back to the drawing board and trying to make regulators happy and up their education processes to show how they can meet the standards that Maine is really trying to figure out, I guess, how it wants to proceed with mining. It's changed the law, but they've got a ways to go and lots to figure out. I mean, they're building up a new infrastructure. They wouldn't have even had a mining department as of really a year ago or a couple of years ago because up to that point mining was actually forbidden.
Understood. I'm going to pass this over to my colleague Adam Graff, Research Department, to pick it up from here, and then I'll go back to some of these great questions that the audience has sent in. Thank you all very much.
Thanks, Campbell. Brian, I guess let me just flip back to your royalty on silicon. Does that make sense? So I guess first, your 1.5% NSR, is that on the full project? And if it is on the full project, is there also an area of interest that's included in that royalty agreement?
It covers the full silicon project and an area of interest. I don't recall off the top of my head what that is, but from what we understand now, just looking at where the drilling has occurred, all of the drilling at the silicon main deposit, if you will, is within the actual property boundary, so we're not really getting into area of interest kinds of questions. And the second target that Anglo started to talk about is called Merlin, and that's in the south part of the property. That definitely crosses the southern boundary onto lands. Well, first it was crossing lands held by Corvus Gold, which Anglo has just taken over, and continues, it seems like, onto lands held by Core, I believe. So, yeah, it covers the bulk of all of the silicon deposit, and would seem, based on drilling patterns, that we've been able to get our hands on the vast majority of this Merlin target. These are huge drilling footprints, by the way.
So, Brian, stupid question for you. Since Anglo has just bought Corvus, and Corvus's ground is contiguous to the west, why wouldn't that, and you have an area of interest, why wouldn't that royalty apply to all of Corvus's resources to the west?
Again, I don't have the maps in front of me, but so to the west, you've got Bullfrog, I believe, to the northwest. The area of interest wouldn't extend that far. So if there's, if there's mineralization that's found on the Corvus ground and within the area of interest, then I guess that would link.
I mean, obviously, there's there's a great deal of of resource. Unless you don't believe unless somehow their technical reports are not going to hold up, there's obviously a large amount of resource on their ground. that pre-existed. That's not part of the stuff on the south side of Silicon. That is also contiguous with Core's deposits. So I'm a little confused on, if you have an area of interest, why all the other stuff to the west would not be included. And then similarly, does Origin have the same royalty agreement, other than the different percentage on the whole project as well as the area of interest?
No, there'd be differences between the Altius royalty agreement and the what would have been originally Renaissance, now Origin agreement. So the Altius one would have been structured with Renaissance, before any real work had been done. It was a funding agreement and had its terms set out. Whereas so Anglo, when they bought the project, inherited that royalty agreement, but they would have negotiated the royalty agreement directly with Renaissance. So those will be two distinct. I mean, there's a 1.5% and 1% NSR, but there are differences between them, and I couldn't speak to what the differences would be in terms of area of influence or anything else, area of interest.
And maybe this is speculation, but wouldn't it make more sense to have your royalty sitting in Origin as far as getting market value?
It might. I just don't know yet, because we don't know what we're dealing with. Maybe it's a significant enough royalty that it moves the needle for Altius, and that's, on behalf of our shareholders, that's what we've got to figure out and make a call around. We just don't know what this resource is at this point in time. The gold royalty companies, they've all got a bit of an aversion towards having too much base metal in their structure, because there's a concern that higher valuation and premium that they get just by virtue of being precious metals will get eroded. The same isn't true the other way, right? We're not going to be penalized for having a gold royalty in our base metal and bulks and renewable energy portfolio. So it really just comes down to, is that the highest and best use? Is it a significant enough royalty?
Considering you're 60% owner of Origin, if a gold royalty,
we're under 20, or we're just over 20.
Under 20. I was getting confused with the renewable energy. Okay, but still, you're a major shareholder of Origin, and if a gold royalty company is going to get more value for the same gold royalty versus a non-gold royalty company, wouldn't it make sense to have that asset in Origin, because you already own shares and you're going to benefit?
Again, maybe that is the route we go, but in our history, we've actually been involved with quite a few gold royalties. We were a major shareholder of International Royalty Corporation when Franco and Royal got in the bidding war over it. We were the largest shareholder of Virginia before Osisko bought it. So,
So in every circumstance,
nobody's going to do anything else.
In every circumstance, Brian, you've benefited from cashing out.
Yeah, like in the case of Virginia, we actually did give a lot of consideration to buying the royalty, but in the end, the gold royalty guys just could pay more than we could for it. And so at that point, we became a seller. In this case, we already own the royalty, and we're a major shareholder of another holder of the royalty. So I really don't know how it's going to play. I just know it's going to be an awful lot of fun.
Very good. Moving off of that royalty, could you talk a little bit about your project generator team and their history, and how you guys have been able to be so successful, where other project generator teams have not been able to be as successful as you guys, regardless of their talent?
I think one of the things that makes the group at Altius tick and stay together and ride through cycles is one, it's a longer term approach, but we treat it as a business. It really is a business. It's not speculation. And a few years ago, we said to ourselves, okay, we've got a problem on our hands now because we have all this royalty income starting to build up. And we've got shareholders that are royalty focused that are concerned that what we're going to do is collect all this royalty revenue and we're going to pour it into exploration because obviously we're a bunch of geologists and that's what we'd love to do is drill holes. And we sat down and we basically said to maintain discipline, because it is a challenge when cash is there, if you're an explorer at heart, you've got to be disciplined in your focus. And we set out and said that the business at minimum has to be at least cash neutral. And that's where we kind of evolved into preference for vending projects to juniors over majors, heavy focus on retained royalties. And like, again, this year alone, it's generated net positive cash of about 13 million. I think exploration, providing new projects, is a genuine and very important service, and it shouldn't be subsidized by anything. It's a real business that provides a real service, and that's the way we treat it. Focus on large-scale projects. It's certainly a business that I think uses more brain capital than hard capital. It's just a great team that's been able to hold itself together for a long period of time. Ideas get funded steadily, up cycles, down cycles. We get it very aggressive when markets are weak and all the juniors can't hold together lands and the majors kill their exploration departments. It's when we get really busy. So it's a whole bunch of things, heavy counter-cyclical focus, long-term, enduring business model, very disciplined in terms of how we prosecute the business. Another thing too, we often get told this from partners. We don't ever try to be that hybrid that says, if it's a really, really, really great project, we'll keep that one and we'll just sell the other stuff. So we're focused. Everything is generated for the purpose of being vended on to the highest quality partner we can find to advance it. So there isn't like a cherry picking exercise that we only put up for sale the projects that we generate that are inferior quality. And I think that's resonated particularly with some of the major groups. And you know what? Several of the projects that we've generated over the years have had major resources discovered on them, and that's known in the industry as well. We generate quality. They don't all
Brian,
work.
Brian, what are some of your biggest? What are some of the biggest wins of your? Now looking back, what are some of the biggest wins from that team?
The biggest commercial win, I suppose, would have been the Central Mineral Belt uranium project. So we put that project into a spin-out company called Aurora Energy. We invested $600,000, I think, acquiring the lands and doing the initial work. And we ended up, the equity position we ultimately monetized, I think, for $220 million. That was a pretty decent one. That bought half the cash flowing royalties that we have today.
Was that the asset that went into? Was that the asset that went into Frontier?
It was a joint venture with Frontier. So Aurora Energy was a joint venture between Altius and Frontier. So Frontier's team essentially went on to run the company. We took back a royalty and a slight minority share position pre-IPO. So we retained the royalty. Now, we ultimately then vended the royalty into a company called Uranium Royalty Corporation late last year and ended up with a pretty significant share position there. And that stock's done amazing as well. So that's the gift that keeps on giving, that one.
Yeah.
The other big ones would be the Kami project from right in the heart of the iron ore camp. We ended up, that resource, I think, turned out, we drilled the first half a dozen holes or so before we vended for a royalty and equity, and it's well over 1 billion ton resource there. Champion's talking about 8 to 12 million tons now of production, producing probably some of the highest quality concentrates in the world. So on that one, at one point, the equity position we held was worth over $100 million. But it didn't get there before the cycle ended last time, and so a lot of that evaporated. But it's always been about the royalty. It's in the right hands right now. And Fingers crossed, but if Champion gives it a go decision, it's going to be, as I said earlier, it's going to be our most material royalty, and it was created for $2 million.
Yeah, when you said that caught my ear when you said the most material royalty, even greater than your potash royalty. That was a surprise to hear. What is the royalty on the Kami project, and I presume at that 8 million tons a year, that's what you're thinking about?
Well, all we know is that Champion said the previous feasibility was for 8 million tons a year, and it was going to be, they were going to try to produce a 65% con. So Kami is back to the drawing, or Champion is back to the drawing board. What they've said publicly is that they're studying it as an 8 to 12 million ton, or, running scenarios at between 8 million ton production rates, and they want to try to get the concentrate grade up around 68%. There's a lot of magnetite in that deposit. It's a little different than some of the other deposits in the region, so it does lend itself to that kind of extra beneficiation. But you do the math quickly, we have a 3% gross royalty. I should back that up. It's subject to a royalty tax, so it's an effective 2.4% gross royalty. So what, 65% iron ore today is trading at about $150 a ton. 12 million tons, 150 times 2.4%, and and it's probably twice as much as our next biggest royalty.
Gotcha.
A lot of ifs and maybes in there, though. Just be cautious. Champion has not said they're going to build this mine. They're in feasibility, so I just want to be clear that it's not a foregone conclusion. But I know they're very focused on trying to make it work.
Are there some technical challenges? Why hasn't somebody come in and take one of the bigger guys come in and scoop them up yet?
Well, Champion's not a junior at this point, right? Champion runs the Bloom Lake mine next door, so they're at around 8 million tons a year of production right now. They produce about 67% iron ore. They're in the middle of an expansion that will take production to 16 million tons. So that should be done sometime next year. They're actually looking at Kami as the next leg in their growth. So it's not a small, it's not a small junior here. They're a major player in themselves, and they've got their own growth ambitions. I do think they're logical. I'm actually surprised at why someone like Fortescue or someone hasn't come in. Somebody that has the challenge of low purity iron ore and the discounts that's getting, and why they haven't made a move on someone like Champion just to try to balance that out a little bit. Because if you're producing the low end stuff, that discount to benchmark is really widened in the past decade or so, and inversely the premium is really widened, and it's logical to see. So, but Champion is well held as well. It's a founder there that owns a lot of the stock, and you're not just going to walk in and take that company. He's got his own dreams, and it's got a fantastic management team as well. They have done a remarkable job there. Great business.
I think one of the slides from your presentation really got me thinking. It was the comparative analysis you had of the other royalty companies. I don't know if you could flip back to that one. In your average your weighted average mine life, weighted by NAV, and I was curious. Obviously your potash projects have, if you count the resources, could have extremely long life. I was curious sort of how you constructed this. If it was, if you counted, for all these various companies, all of the resources sitting beyond the reserves in order to determine the mine life.
So it's NAV weighted across. We just took the top 10 assets of each of the comparables, and then it was NAV weighted. Yeah. So what then was the particular question?
But the mine life, that you're weighting by the NAV, how was that determined? Was it reserves plus resources? Was it clearly is it plus 100% of resources? Is that how you're doing it?
We've done this so many ways. I'm actually having to read the footnotes myself to see which version this is. We look at it.
Yeah, I was looking at the footnotes. It didn't sort of talk about that, mine life, how they constructed the mine life assumption.
I might have to get back to you on that one because we've looked at this a bunch of different ways. But yeah, the other way I've often done it is just to take the prior year production rates against either reserve life, resource life, and whatever. There's another slide actually that might help us here. This one.
Because when you were looking at your potash slide right here, clearly, that if you count the 100% of M&I and inferred to get those really long mine lives, that's going to drag, that's going to be a huge increase to your, to your average, NAV weighted mine life.
I tell you what I'll do, just because obviously if we're going to answer a question, we've got to answer it for everybody. We'll be posting this presentation to our website, so we'll update the footnotes. So anyone who's listening who wants to know the actual exact methodology for that earlier slide, we'll have it clearly made out in the footnotes in the next few hours for you.
Brian, I'm not doing my job if I don't stump you on something.
Absolutely. Yeah. We've only got about 100 assets, so there's lots of ways you can stump me. Trust me on that.
And so let me, with that, let me flip it back to Campbell. Maybe there's a couple of other
we actually need to wrap up.
Audience.
So we actually need to wrap up. I've got a few more questions. Guys, I'll pass these over to Brian to get to them diligently, but got to keep on schedule. Thank you, everyone, for tuning in. Please share your feedback right now as we wrap up or in subsequent emails. And, hey, share it as well. I'm going to pass it back to you, Brian, to close us. Always great to see you and hear about all the many, many, many moving parts. So certainly not the easiest company to model for outsiders. So there we go, Brian.
No, I certainly accept that. One thing you will find, though, that the story doesn't change. So
yeah.
If every time you listen to us, you're going to more or less hear the same story with a few little twists here and there, but the business model is long-term. It doesn't shift. We're focused on what we do, and just really happy with the way things are playing out. I encourage people to listen to what we say we're going to do and go back to what we said we would do previously, and I bet you're going to find out that we do what we say we're going to do, and that's as much as we can. So again, thank you very much for this opportunity. Great questions, Adam. Glad you stumped me on something there. That was great. And we look forward to the next one.
All right. Good day, everyone. Thank you. Bye.
Thanks.